Well, good evening, everybody, and welcome back to Strongman Personal Finance. Today, we have a sponsored video. Somebody paid me $50 to do a deep dive, super detailed analysis of the world famous publicly traded corporation, Webull, also known as Bull. So, Bull, because I love bulls, I have a bull myself. That's where my two kids came from. Webull is a competitor of the more well-known and popular Robinhood. Robinhood is supposedly the app that democratized investing, and retail has flooded into Robinhood in a tidal wave. And Robinhood is now making a fortune off of retail clowns trading options, cryptocurrencies, individual stocks, taking out margin debt. Robinhood is printing tendies, and Hood stock has gone up at like an 85-degree angle. It's done extremely well. So there's this theory out there that this competitor, Webull, which basically offers kind of the same thing, it's a retail-oriented app. People are thinking, is this Webull potentially going to rocket up like Robinhood? Is there the potential for Webull to vertical line? Well, the potential is always there, yes. But there's two major concerns that I have about this company. And one of the concerns isn't even my personal concern. It's more of how other people perceive stocks like Webull. So let's go and dive right into it, and let's talk about Webull. So here's the company, Webull Corporation, ticker symbol BULL. And it started publicly trading a couple months ago. What is that? It started trading, it looks like, on April 10th, 2025. Popped on the SPAC merger, I believe that's what it was. Popped up to 26.33. And ever since then, the stock has kind of been flat. So for the last couple of months, the stock hasn't really gone anywhere. I thought this was publicly traded a lot earlier, but apparently not. Now you compare Webull, which is an app just like Robinhood. You compare that to Robinhood. Hood has been going vertical because retail is churning and churning, and Robinhood is making a fortune off of this. So theoretically, you would think, right? Webull, oh my God, it offers the same thing. It's going to do the same thing potentially as Robinhood. And yes, that's a possibility. My first concern, and this has nothing to do with the financials, is that it is owned by a Chinese company. Now, me personally, I am not like terrified of China. I'm not like what do they call them? Chinophobes. I'm not terrified of China. I don't think China's the world's number one enemy. Okay. And I think they're a huge part of the global economy. They're not going anywhere. And we probably do better trying to at least be friendly to some extent with them than being super hostile to them. But that's my personal opinion. Okay. But there's a perception that Chinese stocks are inherently trash. Does not matter what the company is like. Doesn't matter how good the financials are. There's a perception in the United States, a very negative perception against Chinese stocks. And because of that, that could heavily weigh on the valuation and future performance of Webull. Simply because Robinhood is a U.S. company, simply because of that reason, it will always have, at least in the near term, in my opinion, a higher multiple on earnings. Even if Webull has the same profits and has the same earnings growth as Robinhood, I don't think Webull will trade at the same valuation simply because of that reason. So that's something you got to factor in. Now, if this was a U.S. company, U.S. listed, owned by a U.S. corporation, you wouldn't have to worry about that. But that's something to consider. I mean, look at the PE ratio, 3.9. Okay, I mean, that could be because of anything. We'll go look at the earnings, the most recent earnings they published. But that's a very low PE, right? Why? Well, it could be partially because it's a Chinese stock. It's owned by a Chinese company. I mean, they have like a U.S. subsidiary, but at the end of the day, it's owned by a Chinese company. So that is the number one risk, in my opinion, for stock price performance, is the perception by a lot of investors that, China is the worst thing in the world. So that's risk number one. Risk number two, and before we've even gone into the earnings, are we sharing? Yeah, we're sharing. Before we even dive into the earnings, I pulled up this little search, and I knew this intuitively because I've looked at the app. Somebody showed me Webull, and then obviously I've like used Robinhood a little bit. The big difference between Webull and Robinhood is that Webull is a lot more sophisticated. There's a lot more data. You can basically see a lot more advanced features and use a lot more advanced features on Webull. Now, you would think that would be a good thing, right? But the average retail investor is so stupid, so moronic, that they need the most simple, easy, low IQ interface possible because they're not doing DD. They're going and they're watching influencers, or they're going on Wall Street bets, and they're getting their buy and sells from that. And then they go to their app, Robinhood, and they buy or short or whatever they freaking do on the app. And it's super easy to, Robinhood makes it insanely easy to buy, sell, buy calls, buy puts. Webull is probably overwhelming for the average retail numbskull. Okay. So my second concern is Webull is targeting retail, but it's more sophisticated. And most retail is not sophisticated. They're stupid. So I think most retail investors, even if they don't know Webull is owned by a Chinese company, I think they're going to look at Webull and see all the advanced stuff, and they're going to be like, I want it easy, but swipe up, buy. And they're going to go with Robinhood. That's my personal opinion. But that's not to say that Webull can't go up. It's possible. All right, so let's go look at their most recent earnings. So we have their first quarter 2025 results. I didn't see any newer results in this, and these were published May 22nd, 2025. So total revenues grew 32% year over year. That's very fantastic growth. And the reason revenues are growing is because the market's been going up a lot, and retail's getting really excited because when stocks go up, they start to buy stocks. That's how their brains work. Reflecting strong account and trading volume growth, customer assets increased 45%. The more assets that are in there, the more likely they are to generate revenue from people churning those assets. Increased by customer deposits and disciplined execution alongside robust revenue growth driving profitability. So we know the revenues increased 32% year over year to $117 million for the quarter. Now let's go look at Robinhood's most recent revenues. So we got $117 million. And then for Robinhood, their most recent quarterly revenues were $989 million. So yeah, Robinhood is it's like 9 times bigger when it comes to revenues. Way bigger than Webull. Webull is a tiny little cute baby. Isn't that adorable? Trading revenue increased 52%. Yes. Adjusted operating expense. Okay, so they're raising revenues and they're cutting expenses. That's good. Income before income taxes increased $29 million from a loss to a positive income before income taxes of almost $20 million. So they're posting positive income before taxes. Okay, good. Net income increased $25 million to 12.9. So they made $12.9 million of profit after all their expenses were deducted. Customer assets totaled $12 billion, 45%. That's explosive growth, driven by strong net deposits, which grew 66% year over year. Registered users increased 17%. So that seems like a little low. So this is a smaller company, right? And they only increased their users by 17% year over year. Funded accounts increased 10% year. Yeah, you would think they would be higher percentage because it's a smaller company. You would think they'd have higher growth in users. Equities notional volume, 15% increase year over year. Options contract, 8%. And then daily, I think this DARTs means daily average revenue transactions. So basically the number of transactions that are being processed that produce revenue per day. That's what I think that is. Increased to 924,000, representing 44% year over year growth. So they're not really growing their users super fast year over year, but those users are trading a lot more. And that's what these apps want you to do because that's how they make money. All right, they partner with Kalshi for prediction markets, so gambling on random nonsense. Totally a great place to put your money. They launched Webull Premium, a subscription-based member service. Okay, that 40,000 users representing $2 billion in customer assets. It just became public. Obviously, we know that. We saw that on the chart. We enhanced the Webull Advisors platform by partnering with BlackRock to offer model portfolios. Okay, so I guess I hope this is better than what Robinhood was offering. Webull Advisors now delivers intelligent, automated wealth management tools to its US-based customers. They can now access a range of professionally managed, diversified portfolios across various asset classes, including alternatives and digital assets. No. And then they collaborated with Visa, whereby Webull users can efficiently transfer money between their Webull brokerage account and external bank accounts through Visa Direct. I mean, okay. I mean, wouldn't you want the money to stay in there and be invested? All right, so let's go look at the financials. So they got almost 300 million of cash. They got almost $1 billion of segregated cash equivalents. Receivables from brokers, dealers, and clearing organizations, 219 million. Receivables from customers, 299 million. I believe that's loans they've made to people for people to frickin' gamble. And then customer held fractional shares of 10 million. So they're mostly leasing. A right of use asset is just like a lease that you have to put on your balance sheet. And then obviously you have a corresponding liability on the other side, on the liabilities portion of the balance sheet. But overall, I mean, they're decently asset light. Most of their assets are in cash, customer deposits, stuff like that, receivables from customers. And yeah, okay, they got due to customers. This is just basically deposits. So overall, I mean, their balance sheet, nothing extremely concerning or crazy on here. They still have, oh, wait a minute. Wow. Hold on a minute. Convertible redeemable preferred shares. $2.8 billion. So they actually have, let's see, total liabilities. Hold on a minute. So they got $2 billion of assets, and they have $1.3 billion of liabilities. But I'm not sure what this convertible redeemable preferred share, this mezzanine equity is. So, okay, I mean, they got plenty of cash. I don't see like imminent bankruptcy here. Okay, so that's their balance sheet. Let's see what their revenues are coming from. So strong growth in equity and options order flow rebates. It's like payment for order flow, basically, $64 million. Interest income, $31 million. That's probably interest from cash and from loans. Handling charge income, not sure what that is, $17 million. That's almost a double year over year. The interest is actually down. That's interesting. Year over year, the interest income is down like $1 million. And then other revenues are up pretty precipitously, almost a double. That's probably their subscription. And then, of course, costs have increased a little bit as revenues have increased, but they've actually done huge cuts to marketing and branding. It's down like almost $12 million. So slight growth in technology and development expenses, more costs in brokerage and transactions, but that's makes sense because there's more transactions going on. And then general and admin, slight growth. So they actually cut their operating expenses, like they said, by 2%. So revenue growth and operating expense decline equals more profit. Okay, and then they have this other expense here of $1 million. Not sure what that is. Income loss before income taxes, $19 million. $6 million, and that's a lot of tax. Woo! That's a lot of tax. I'm not sure why that is. And net income of $12 million. Okay, so, and then they have this preferred shares redemption value accretion. That's got to be some kind of, it's got to be a fluctuation in the value of the preferred shares, which means if they're deducting it, that probably means they have they owe more money if these shares get redeemed, basically. So that's why they recorded a loss. So you see a earnings per share of -6 cents, but the fundamental earnings of the company are positive. But because of fluctuations in looks like a liability account, they had to record a $21 million expense or loss on their income statement. So that's not the core business. That's just basically what they'd have to pay for redemption of preferred shares is what it looks like to me. So you're going to see huge fluctuations in that, and that could easily lead to a loss or a gain on the income statement in the next quarter. So overall, the core of the business is profitable. That's a fact. All right. A little bit of share issuance, whatever. They have a statement of cash flows on here. Hello? Do we have the statement of cash? Do we not have a statement of cash flows? Interesting. Okay, so that's kind of my thoughts. I mean, the company's profitable. They're growing. I'd say the third risk to this company, besides the other two things that I mentioned, is the fact that if we ever get out of clown market, this thing is going to collapse. Because the second the market starts to go down, if we enter a bear market, retail capitulates extremely quickly. And this stock and Robinhood will utterly collapse. Because without retail invested in trading all the time, which they stop trading if they lose money, the income of this company, which wants you to trade, is going to precipitously drop as well. That's why Robinhood collapsed. You remember Robinhood went down to like, what, $8 during a bear market because retail, after a weak bear market, gave up. And the value of Robinhood utterly collapsed. The same thing could happen at Webull. So that's a risk. So the biggest risks are, like I said, just summarizing. Webull is more sophisticated than Robinhood. Most retail investors are absolute morons. That's a risk. So I think Webull is going to be used a lot less than Robinhood. They're going to have a hard time competing with the morons. It's owned by a Chinese company. People have a negative perception of that. And then there's the risks that if we leave clown market, this company will implode regardless. But is it possible that it could go up massively, just like Robinhood did? Yes, it's possible. If we keep in a bull market, if we keep in this like euphoric, crazy market for the next couple of years, yes, this company will probably increase in value. I would not be shocked. All right. So let's do some member comments. 45-minute break between your, well, it's as fast as I can make the thumbnail and then prep the materials. All right, this is my CPA services. If you want me to give you a free 30-minute consultation, which you should take because it's free, I can review your tax situation. I can give you an upfront quote for tax planning, especially if you're self-employed. You need that, so you make sure you're paying your proper estimated payments. And we can potentially talk about how much I'm going to charge you for your tax preparation for the next tax season, which is coming up very quickly. So click that link. There's a variety of services there. There's one for tax preparation. You can book a free 30-minute consultation with me. I will talk to you absolutely for free. I'll give you an upfront quote for any services that you want, and then we'll go from there. Don't you want to talk to me for free? Don't buy Webull stock. Wait for the Yield Max ETF version. Oh, well, they only make ETFs of popular ones, so. Strongman getting himself some cheeks. I wish. What's up, peeps? Buffett sold off more Apple and Bank of America and bought United Health. Yeah, oh my God, everybody was freaking out about that. Everybody was freaking out about that. Yes, I'm very proud of the money I spent for this. You didn't spend anything, Alan. All you do is whine. You get everything for free. Are you a chick? Are you a female? No, Eric, he's not actually buying. He's just lying again. I'm not lying. You think I would buy Webull? Come on. But it actually, like, when I do, like, a market, I think I'm going to use the Webull desktop for, like, market opens because it's actually more sophisticated than moron clown Robinhood. But that's why Robinhood's doing so well, because it's so stupid and easy that these idiots can go on Wall Street Bets, get some stupid stock tips, get on their clownish app and swipe up. Ugh! So I think Robinhood has the kind of advantage for that. Both are lame. Jup token for the win. No, we're not buying Jup token here, everybody. Read the video title, Why So Bluetooth? Strawman said he's buying the stock when he isn't. It's a lie. I know. I'm a dirty, disgusting liar. Alan Carlson, the sarcastic title. It's called clickbait, Alan. It's called clickbait. He just admitted it. I know. I'm scum of the earth. All right. Well, I see you, Elemental. You got to buy the membership, bro. Okay? You're like a computer guy. You should be loaded. You got to buy the membership. Don't be cheap, brokey. Are you a brokey? Anyway, that was a sponsored video. Yes, I was paid $50 to go over Webull stock and give you my honest thoughts. And if you want to sponsor video, you can click that pinned comment. It's right here. And at the conclusion of the live stream in the pinned comment of the video, you can send me $50. It's all laid out super easy for you. Even a Robinhood investor could figure it out. You pay me $50, you shoot me an email, and I make a dedicated video about whatever you want to talk about. Thank you for tuning in, everybody, and have a wonderful, delicious, superstitious weekend.